In this video, I'm gonna show you how I can consistently make $6,000 trading just one asset, and that asset is just going to be US oil. However, if you don't want to trade US oil or trade something like gold, NASDAQ, or US 30, this same concept and strategy applies for all of those pairs and only just those pairs. So what I'm gonna do is show you my results. Once I show you my results, I'm going to show you and give you a 300% sign-on bonus that you can use to kickstart your trading career with Henkel X. With this, you're able to use this with low leverage trading something like oil, US 30, NASDAQ, or gold. Once again, remember, the key to making profits is having consistency and following a trading plan just like this. If you guys want this exact trading plan, go ahead, check the description. I am giving that away for free, plus the strategy broken down in details. That is in the description. So let's go ahead and deep dive into this so I can show you guys how you can make consistent profits trading just these assets. Let's get to it. Now, looking at the results, we've been pretty much cashing 1,200, 800, 2,000, 20, only 240, 240, 200, 1,000, 1,000, 2,000, 2,000. Let's go another day. We've been basically doing 2,000, 2,000, 1,000 per trade. And I usually take anywhere from 2 to 3 trades per day. So this can be anything from $2,000 to just about $6,000 just trading oil. And that's exactly what I'm going to be showing and sharing with you guys. Once again, like I said, you could trade this with anything besides oil. It just has to be either gold, NASDAQ, even S&P, and US 30. Now, the next thing is, if you guys want that 300% sign-on bonus with Henkel X, it is very vital to go with a broker with low spreads. Because once again, not every broker will be able to allow you to trade this strategy, because this is a scalping strategy that consists of scalping on a lower time frame without having a huge spread. And this is why I am saying Henkel X would be the best solution, not only just because of low spreads, but because I am giving you guys a 300% sign-on bonus as well. Check that link down below if you want that. It will bring you to this site where you can watch review videos, and also you can see more reviews from other people and get more insights about Henkel X if you want to. But let's go ahead and dive into the strategy. Okay, so I'm gonna show you all of my trades that I've been taking from winning and losing trades, and then I'm gonna break down the exact format of how this will look in a perfect world, and then show you live examples. Remember, if you want to skip past this, you can, but I'm telling you right now, skipping past this is not going to help you, because you need to know the perfect setup first before you can start going into the live market, because it's going to become so hard and difficult for you to understand that. So please make sure you watch this all the way through. Now, let's start off with this trade right here. This was actually a trade that we end up holding over time because the setup just didn't play out within that session, but it never actually hit my stop loss. So that was actually cool. So looking at this trade, we always try to go for a 1 to 3 at least. That's like our bare minimum. However, you see this was a 2.85. It's fine, but we always try to aim for a 1 to 3. So how this trade played out was, we seen on a higher scale, which is the 4-hour scale and the 1-hour scale, that we were going down. I established that off of higher time frames, and that's it. I don't need nothing else on the higher time frames. The 1 hour and the 4 hour is just only to determine the trend. Once we identify the trend is either up, down, or sideways, I now know what direction I want to be taking this for my setups. From the 1 hour to the 4 hour, I like to jump on a 15-minute time frame. On a 15-minute time frame, this is where I look for a lot of wick rejections. So if the market is going down and I am on a 15-minute time frame, I'm going to look for wicks after or before a huge displacement candle. So therefore, we have a wick right here. We have from the top to the bottom. This is a major wick. Why is this wick so important? It's because if we look right, we see we had 1, 2, 3. This is known as, a lot of people might see this as the 3 white soldiers, or I think it's the other concept away. But basically, we had 2 major moves happening, which is known as displacement candle or engulfing candles. You will hear me say that a lot. So since we had a wick, and then right after the wick, we had a huge aggressive move to the downside with these engulfing candles, this marks my area as a liquidity pool of money needs to come and get tapped here once again. So what I then like to do is, from the 15-minute, because this had happened here, right? This is the move that had happened here. I then now jump on a 5-minute time frame. Let's go ahead and go back. And then I map out, all right, if the market can come back in this area again, then I'm going to go ahead and take my sell. So we're just going to wait to see if market can tap back in, and it's tapping in now. As market is tapping in, I don't just sell it yet. I don't sell it until I see price action is giving me the direction to fucking sell it. What I mean by that is if the candle is big bank versus little bank, meaning if I see a bunch of blues and I see one little candle that is red, that is not a fucking opportunity to take. You take the trade once market gives you the bias that the sellers are aggressive. This is true volume of price action that I follow to the T. So see right here, we had a very beautiful sell, but then at this given moment right now, we have buyers in the market. This one candle does not break and confirm that we're aggressive. This is an example I want to explain real quick. So for those that don't understand, watch this. If you do, skip this. We're in a battlefield and we have a bunch of blue candles in the market right now. Now, let's say that these are ships, by the way. So we're going to say we have ships and we're in the sea. And we see that we have all blues versus red. Okay. And let's say that these are ships that's about to shoot their canyons out, or we're just going to say bomb the other ships. Who do you think will win in this situation? Clearly blue, because there's more blue in their bigger ships. We see red have two big ships, but it's only just these two. Now, let's say that they get more of their allies to come in, and now we have these ships coming in. Now, who you think is going to win the situation? Possibly red, because now they have bigger ships and more ships, so they can easily take that. Guys, that exact same concept is exactly how I read the market in volume. When I am looking at price for an entry on a 5-minute time frame, that is exactly what I'm looking for. I'm not worried about all of this. That's noise. That's noise. I'm only worried about right here. This is what I'm focusing on in the moment. So as I'm looking in the moment, I'm going to wait to see the setting of that entry. See, and this is why we don't enter in these setups, because if you enter in these setups, you will see clearly you would have fucking lost your money because you don't pay attention to solo E. We're going to wait until we see the buyers are strong. This right here is the prime example of a strong buying candle. I entered off of this close of the 5-minute. Do not enter into the candle close. I see so many students of mine that will take a trade when they see the candles here, but 2 seconds or 20 seconds left, the candle goes right back up, and now they're mad at everybody else but themselves because they fucking did a big ass mistake because they were impatient. Don't be that fucking trader, please. So therefore, we are smart because we watch solo ETV videos. We're going to wait on market to close. Once it does, your stop loss is the easiest part, and your stop loss is literally going to be 2 to 5 pips from the opening of the candle, which is right here. And this is exactly what ended up happening with this trade. This is why this was a winning fucking trade, called in my Discord community, and even my trade that made me about $3,000 to $4,000 that day. Very simple trade, fine, perfect execution. And as you see, it took a while, but it never went past my stop loss, which made us make money for the next session. This was on Thursday, and this was actually before the 4th of July. So that's probably why it took a long time. Now, before we go into the next setups that you're seeing all here, let me show you a perfect world of my setup. And if you want to skip past this, by all means do it, but please do not leave a comment down below of how to trade this strategy when I just broke it down right here, because you just don't know how to watch videos for whatever reason. So let's get to it. Now, on a 4-hour and or 1 hour time frame, all I am looking for is the market going to go up, or is the market going to go down, or is the market going sideways? I have a very basic strategy for all three of these. If the market is going up, I am only looking for buys. This is what I do now. I no longer go ahead and I no longer sell it anymore if it's a buying market. I now wait. And ever since I've been doing that, you guys see my results been tremendously positive and beautiful executions because I know how to be patient and I know how to wait. Hope you do too. And then the sells. If the market is a selling market, I only look for sales. Now, if the market is going sideways, I have a strategy called the liquidity phase that I've been teaching about in my live streams when we used to go live every fucking day on YouTube for the past 3 years. That is what we do here. If the market is in consolidation, it will take the high and take the low before it goes one direction. That is what I do in any time frame. I need to see this on a 1 hour or the 4 hour time frame. Now, after I establish that, the next thing is on a 1 hour, 4 hour, or if it's a up or down, let's say it's an uptrend, I now look for my range. And what I mean by my range is the most recent move to the upside. We have some type of noise bracket where we're like, if the market is going up, I'm gonna pay attention to everything. No, the fuck you don't need to. You just need to pay attention to the most recent high that took the most recent structural high. So I am paying attention to this move only right here, not this. I don't need that. I don't need that. I am a scalper. I do not need that. All I want to now do is identify my A point and my B point. This is probably going to be the most hardest part for any trader to identify. And if you have not subscribed to my YouTube channel, if you are not in my free Discord community, or if you're not following me on Instagram and watching all of my free fucking reels that I'm posting about this strategy and more, you are missing out on a shit ton of information. Anywho, what I'm getting at is you want to wait on market to pull back only in this range. A lot of y'all want to pay attention to this range and say, well, my stop loss or my support and resistance is here. My supply demand is here. And you realize market came here, but you're so biased and you're so set and married. You're like, you might as well fucking and just get engaged if you want to with this supply demand level. And y'all be married for 30 years, still waiting on it to hit this level. And it's never going to hit this level until maybe like 50 years in. You just missed out fucking everything because you don't know how to find the most recent range. So therefore, what we do is we look for the supply demand, the order blocks, the institutional levels, support and resistance levels in this bracket right here. And this is where my Fibonacci comes out. So I draw my fibs from the A to the B point, and anything below my blue line, which is my 40, is really the 49% or 47%, 44%, sorry. You can go ahead and pause the video. I wait on it to break below it because anything below it is a valid key level, order block, supply demand level. All of this up here is noise to me. I do not care for that. Once again, if you guys really want to follow me, you see my results, then follow me. You don't need to worry about what's above the 50% mark. Focus on what's below it. If it is a level above it and it did tap that level, then no fucking well. You have not missed out, but you had stood to your rules because you know how to execute. So therefore, what we're going to do is we're going to wait on market to create some type of supply demand here. And then once we get it, we take the setup. Now, within that, I like to look for wicks. When, like I said earlier, once I see a wick and I see a displacement after the wick, that confirms that market is going to come back potentially in this level because it just left a lot of orders there. And that is my entry. I don't sell it to there. I'll wait for it to get there first. Then I look for price action volume, and then I take the buy. And that is literally the strategy that you can follow with gold, with oil, of course, with 30, and definitely NASDAQ. Definitely NASDAQ. So let's go back and let's look at this setup right here. So I'm on a 5-minute time frame, but we're going to go on a 15-minute time frame, and we're going to play this game of knowing what is what. So how do we figure out the most recent range? Well, we draw out the bottom, the move before it actually, went up, which is basically this right here. How do we know that this is the A point? We look at the previous high. Once it breaks that previous high, this identifies the A point. Technically, we also had it here. This identifies as the A point. Okay, well, how do you know what's the B point? Well, you mark out every low. You just draw a line, draw a line, draw a line. We see right here, this is where it broke past it. So this marks as the B point. So this is my range. I want to jump on a 5-minute time frame to make it look a little easier. And we're going to draw out our fields from A to B. And anything below this mark is what we're looking for market to tap into. And then from there, that's when we buy it. Now, as you see with this setup right here, we had a smaller range inside of this bigger range, which was this play that I just drew out. But inside of this, we even had a smaller range, which was technically this play right here, which was from here to here. Now, this setup was a lot different from a lot of the other setups that I talk about, but this is how, if you get advanced and get really good at this, this is how you can execute these trades. And this was another winner that we took, which was on the 7th. And as you see on the 7th, we had $2,300 made. And then as you see, once again, all of these trades were on the 7th. We had pretty much a successful day. Another $2,600, $2,000, $16. So I was just eating off of this trade because I was like, boom, 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 boom. Every time the market pulled back, that was another opportunity for me to get until it gets to my 1 to 3 mark. Once again, let me just show you another setup of a losing trade, and this happens. So right here, we had another setup where market decided to hit that engulfing candle. I was like 4 or 5 pips down from it. Unfortunately, it took us out and then it went in our favor. That happens, guys. You're not going to win every fucking trade. And if you feel like you are going to win every trade, then guess what? The market is going to eat you alive. So keep in mind that if you want proper execution and if you want structure, get the plan, watch these videos, subscribe to my YouTube, and follow me on Instagram and TikTok, and just stay in tune with our Discord community. Your boy got you. Other than that, I appreciate y'all. Your boy Solo E. If you want more like this, follow me for more, and I'll see you guys in my next video. Peace.